Nigeria's inflation rate rose in February after recording a fall in January. Consumer price index increased between February 2021 and February 2022 was 15.70%, higher than 15.6% that was recorded in January. And then it went from 15.70 to 15.92% for the month of March. Well, some of the drivers, although they are kind of obvious, looking at the month of March and the activities there. But let's dive deep into that with Adeshola Sumoni, analyst with Financial Derivatives Company, joining us from Reading in the United Kingdom. Hi, Adeshola. Good morning. Welcome back from the holiday. Been a while.
Good morning, Nini. Thank you. It's been a while. Yes, thank you for having me on the show.
Yeah, good to have you. Well, the surge in inflation, I think, doesn't come as a surprise. This is predicted with the war in Ukraine, the sanctions on Russia, the volatility in the oil prices, and a lot of happenings in Nigeria. I mean, this was expected, I believe.
Yes, it was indeed. Like you mentioned, Ini, Nigeria's headline inflation has increased in March to a 5-month high of 15.92%. Up from 15.70% in February. On a month-on-month basis, it also increased 1.7% month-on-month, up from 1.6% in February. And some of the drivers, as you mentioned, is the price of diesel. For example, the price of diesel averaged around 288 naira to the per liter in January, but that increased sharply to about 750 naira per liter in March, which is around a 160% increase. And this is significant given, the state of Nigeria's electricity supply. Many households, many businesses have to, depend on alternative sources of power, which include diesel-fired generators. And like I mentioned, as the price of diesel increased, the cost of production for many manufacturers also increased, which fed into inflation prices. We also saw, higher oil prices in the global economy, which, also fed in. We saw, we are seeing, currency pressures and, demand management measures by the Apex Bank, which is also, passing through to headline inflation numbers.
So you talked about diesel. We can trace that to the war in Ukraine. But how much other factors, or which other factors can we attribute to the war in Ukraine leading to this surge in inflation?
I think first let's start with neither Russia nor Ukraine is a major trading partner of Nigeria. So the effect we are seeing is mainly through commodities. One, we are seeing sharp rise in the price in global oil prices, which are currently, I think, $114 per barrel.
Yeah, 113 this morning.
Okay, $113 per barrel. That increases the landing costs. Nigeria, although we're an exporter of crude, we import refined petroleum products. So as the global commodity prices, the global oil prices rise, the landing cost of PMS in the domestic economy also rise. But for PMS, because we still have, we pay millions of naira for subsidy, so we don't really see sharp changes in the price of PMS. But for diesel, because the downstream sector of diesel is fully deregulated, what we see is the market price of diesel as a result of what is happening in Ukraine, and that is why we saw a sharp increase from around 288 naira to the per liter to around 750 naira per liter in March, because that's because of what's happening in Ukraine. Also, for some commodities like wheat, for example, Ukraine and Russia are some of the largest producers of wheat in the world, and because of the tensions between the war in Ukraine, the price of wheat in the global commodity market has also increased. And because Nigeria is an importer of wheat, we import wheat for spaghetti, noodles, flour, a lot of things. So there's also that imported inflation, and that is part of why we are seeing, the CPI increase quite sharply.
Yeah, you know, you talked about the issue of subsidy. I mean, now it's now 4 trillion, at least that's the proposal, and it's gotten the approval of the lawmakers. So even though Nigerians are not paying for it directly at the pump, we're paying for it because the money that would have been used for capital infrastructure, which will feed into the economy and manufacturing and GDP, goes into subsidy, and we keep borrowing for that. But the last month, the month of March, which is a month in consideration, we also had that issue with substandard fuel, which brought back long queues, you know, in filling station. Are we over that yet? Is the economy over that yet?
Indeed, it seems, I would not say we are over it per se. I would say the situation has eased up a little bit. I mean, right now you could just drive into your petrol station and you don't have to queue for long, or you will not even find any queues. And that's, I think, signals that, you know, the issue of substandard fuel has kind of eased a little bit. So I won't say it's over, but I'll say that it has eased, maybe significantly, actually.
And now we're having Libya closing its biggest oil fields. What happened, and how do we expect this, you know, to affect price again? Because the price of oil, it seems very, very sensitive.
Yes, indeed it is. So for some context, Libya is what we call a fragile country. They have a history of civil war, starting from, I think, the Arab Springs, or civil war in 2011, where, you know, NATO-backed armed forces helped, you know, to oust their president, Muammar Gaddafi. So there's that history of that. And what we are seeing now is some continuation of the history, of that history. And a country like Libya is, although it's oil rich, it's very fragile, and small threats to peace, you know, have big implications. And what we are seeing now is some demonstrations, some protests and demonstrations, because of the prime minister. There are some elections that I was supposed to hold in December that did not hold, and all of that is leading to some demonstrations. So what we're seeing is some armed forces, some armed groups going to some of the oil infrastructure to you know, suspend production essentially. So what we saw is we saw the state-based National Oil Corps suspend production and declare force majeure in the largest, you know, oil field in Libya. And this is quite significant because Libya is one of is an OPEC member, and they produce around 1.2 million barrels per day. So currently, at least 50% of their production is offline, and that is quite significant. Also, given the global, what is happening in the global commodities market, particularly in the oil market, because of the Ukraine Russia crisis. There's already a tight supply situation. Now, taking around 500,000, 600,000 barrels per day off that market is also, you know, is deepening concerns about supply, and that is why we are seeing oil prices increase quite sharply.
Now, you know, we have a lot of efforts going on. We have the U.S., you know, from releasing from their reserve. We have talks with Iran also to bring them back into production. We have the efforts to bring the UAE and even Saudi Arabia to release more. How are these going, and how do we expect this to affect supply and consequently price?
Let me start by saying I think Russia has threatened to you know, cut off supply from unfriendly countries. You know, and also the U.S. is trying to, the U.S. and the West really are trying to, you know, impose some sanctions. They've imposed some, but also trying to impose some more sanctions. For instance, the EU has imposed sanctions on Russia's coal exports. They're also trying to impose, you know, some more sanctions. But everyone is trying to be careful because Russia is such a huge oil producer, and if Russia does not, if Russia, you know, starts to reduce some of its exports, then the price of oil is going to increase quite sharply. But all these other talks, for instance, they talk with Iran trying to lift up the sanctions, they talk with the UAE, they talk with the US, all of that, they're having some effect, but I think that is not big enough to significantly dent oil prices, because of the position that Russia has. I think that tension will continue to drive oil prices for the near to the medium term.
And also looking at the consequences of the war, you alluded to this before, the issue of wheat, and grains. Recently, the president in Nigeria approved the release of 40,000 metric tons of grains, to help buffer some of this. Because even before the war, I don't know if you remember, we had the issue with supply of corn, which affects millers, goes down to your egg, goes to your bread, and heats all of that. Is this enough, this 40,000, or do you think there's more that could be done in the face of all that's happening?
It's a step in the right direction, but it is not enough. Nigeria is a huge country. We have a huge population. We have huge youth or growing population. And as a result of that, there's huge demand coming from all of that. Also, we have a high urbanization rate. Around more than 50% of Nigerians live in urban cities. So all of that, affects the demand for, corn, for wheat. And that is why, Nigeria is such a big importer of some of these products, because the domestic production, even the reserves, is not enough to meet Nigeria's huge demand needs for these commodities.
And now World Bank, no, not just World Bank, we've had IMF, we have Fitch cutting growth outlook for the year 2022. What's the implication of this? What should we be doing now as Nigeria or as the world? What should we be doing with all this reduction in the growth outlook in countries, of regions? We have for sub-Saharan Africa, we've had for the world, we've had for Nigeria. What should we be doing now?
I think we're living in interesting times. We are experiencing once in a century events happening concurrently. One was the pandemic. Is the pandemic?
And because we are not even over the pandemic yet.
Exactly. So one is the pandemic. Two is this Ukraine-Russia crisis, which we've not seen the scale of this since the Second World War, which ended in 1945. So we are seeing all of this, and the reason all of this, plays also into global growth. Like you said, the World Bank cut forecasts to I think 3.2% from 4.1 in January. Around last year, their forecast for 2022 was 5.7%, because everyone believed that 2022 is going to be the year of recovery. The pandemic is easing. We've got the vaccines and everything is going good. And then comes the war. So first of all, that brings the issue of forecast into question. But the key there are key downside risks, and one of them, major one, is coming from the Europe and Central Asia region because of this Ukraine-Russia crisis. We're also having China's growth slow down a little bit, which is also putting some downside risks, mounting some downside risk to the growth forecast. Also, if the war persists, we're having issues like supply chain challenges, possibly financial contagion, and debt crisis in the emerging markets economy. Take all of this in the context of rising global inflation, right? And central banks in major global economies shifting stance towards what's the word now? Hawkish. Moving towards a hawkish stance, So all of this is a very interesting cocktail, and for emerging market economies, I think the impacts are quite significant. One, if the hike in interest rates globally moves faster than we expect, we'll see capital flights, which will mount pressure on our external reserves, which is already pressured, and on our exchange rates. Also, our issues around debts. It's a lot of it's a dangerous combination. Let's put it that way.
A dangerous combination. That's a nice way to put it. But anyway, just before we let you go, what else is going on in the commodity space? Any good news there?
Okay. For domestic commodities markets, the prices are rising, mainly due to logistic challenges. Transporting some of these commodities from northern parts of Nigeria down to the south, uses some of these tractors and trailers that are fired by diesel. And given the spike in diesel prices, that is also feeding down to domestic commodities prices. For instance, like we already alluded to, the price of flour in the domestic commodities market is up 5% to 22,600 month on month. The price of beans also is up 5% to 40,000 naira month on month. Price of cement is up 7.5%. The price of tomatoes is up 20% to 12,000 naira. Price of pepper is also up 40% to 14,000 naira. Also, price of semo, yam, sugar, all of them are also up, mainly driven by logistic costs. Also, given that this year is a pre-election year, we expect that government spending, electioneering, campaign spending is also likely to keep some of these prices elevated in the near to medium term.
All right, Desola Sumoni, thank you so much for sharing your thoughts with us. We hope those electioneering money will go into like the printing industry. At least it will still create employment and jobs for for a group of the population. Thank you so much for joining us. Desola Sumoni is analyst with Financial Derivatives, joined us from Reading in the UK. Do enjoy the rest of your day.
Thank you, and you too.